statistical, mathematical fact
never has been down.
has broken every single record. There is no asset that has come close.
It's the only thing in the industry that was not touched, that was not hacked, and it never fails doing what it promised in 2009. It's never
What's
failed.
the best performing asset the world has ever seen? And you'll find out that it's Bitcoin.
Welcome supporters, welcome haters, welcome to all of you. Welcome to another live Spaces with Oliver Velez. Of course, my name is Oliver Velez, and yes, that's right, I am that 13%er Bitcoiner. That's right, ladies and gentlemen. I'm that guy. I'm that 13%er. I'm that person that's referred to as a Bitcoin maxi. I'm the person that is often referred to as one of the 13% of all Bitcoin owners, Bitcoin holders, Bitcoin hodlers, who believe that there is no second best, that you can't have a second internet, a second wheel, you can't have a second electricity, you can't have a second fire, that discoveries, which I believe Bitcoin is, not an invention, that discoveries can only happen once. You can't undo a discovery, and you can't duplicate a discovery. Bitcoin is the manifestation, in my opinion, of the discovery of digital scarcity. I believe with all my heart that digital scarcity has always been in existence from the beginning of time. The human race had to get to a place in their evolutionary cycle, in their evolutionary development, to be able to discover digital scarcity, understand digital scarcity, and they had to rise to a place or advance to a place where it was meaningful and appreciated. But the idea that digital scarcity was an invention or a creation by a man, I think is a mistake. I think that digital scarcity, which Bitcoin is the representation of, I believe that digital scarcity is no more an invention than microwaves, which for millions of years were undetected, unknown, but were discovered. I believe that digital scarcity was no more an invention than the atom. For millions of years, the human race lived without the knowledge that there was an entire atomic level of life, that the smallest unit of life was not a human being. I believe that digital scarcity is no more of an invention than the discovery of subatomic particles. And for decades upon decades after discovering atoms, we finally realized that there was an entire universe, an entire world that existed at the subatomic level. These things are discoveries, and as the human race continues its march toward greater and greater realizations, these discoveries are made along the way. I think that many people get the items that are used to make the discovery, they misconstrue the items, they misconstrue the tools that are used to discover something as the invention. They think that the outcome must be an invention because the tools were an invention. And therein lies the rub. The tools that may help one discover something, those tools may be inventions. Those tools may be innovations, but those tools that produce or help the human race discover something that had not been discovered before. Those tools, just because they were discovered, doesn't mean that the item that they helped discover is also an invention. And so this is at this is at the core for me. This is one of the core fundamental truths of Bitcoin. And once you understand Bitcoin, in my opinion, from that point of view, a lot of nonsense drops. I think that view, that understanding cuts through, captures, and clarifies the essence of what Bitcoin is, what it's here to do. And I also believe that once you fully understand that, once that epiphany hits you, that you see very clearly through the falsity of the idea that there can be something else. When it comes to discoveries, there can't ever be something else. There can't ever be another atom. There can't ever be another fire. There can't ever be another electricity. Discoveries are one-offs. They are one and onlys. Now, there can be myriad innovations that are built on top of those discoveries. We are still building innovations on top of fire. We are still scratching the surface of use cases for electricity. We can build on top of the internet, but there can't be another internet. And so that is one of the fundamental truths, one of the cornerstones of Bitcoin's fundamental truths, in my opinion. So, guys, here we are. As I always customarily remind you, is that I don't pass the mic. I sort of have a monologue. You can ask anything you want. I'm a big boy, even if you feel it's a tough question or something that I might take offense at. Trust me, I'm a big boy. I can take it. You ask to your heart's desire. You ask anything your little heart desires. All right. Nothing is off limits here. I will try to take as many questions as you possibly can, and probably will be good at taking all of them since most of you don't ask questions. And I don't know whether to take offense at that or to pat myself on the shoulder for being so good at communicating my points that it erases all of your questions. I would assume it's the former, that I should take offense at it, but we'll see. All right, guys. I usually draw 5 people. There are slightly more than 5 people here, so I want to thank all of you for taking a little bit of time out of your schedules just to sort of hear me blab about one of my favorite topics today, Bitcoin. Now, I recently made a post, as most should be aware. I made a post about I debated whether I would do this because I typically do this for my internal organization. I do this for my traders. Um, and just so you know, when I talk about my traders in connection to Bitcoin, they are taught to trade everything on planet Earth for Bitcoin. They're not taught to trade Bitcoin. They are not encouraged to trade Bitcoin. So I don't want anyone to confuse the matter. Yes, I refer to all those in my organization, and I have individuals that spread over 95 different countries in my organization. They are encouraged to trade everything on planet Earth that moves for Bitcoin. They are not encouraged or taught to trade Bitcoin for anything else. That would be backwards, in my opinion. And in the same fashion, you, all of your lives, you've been taught to trade everything in your life for the US dollar, or for the Mexican peso, or for the Argentinian peso, or for the Turkish lira, or for the euro, or for the Japanese yen. All of your life, you were indoctrinated and brainwashed and also coerced to give your life up for another token. All right. You were taught to go into debt, to get yourself educated, to go to work to earn another token. You're taught to give your time, your energy, your effort, your talent, your life, which is made up of your time. You're taught to give your whole life for something else. Our message here today and every day is, why not change the item that you give your time for? Why not change the item that has failed us? The dollar, the peso, the lira, the yen. Why not trade our time, our talent, our energy for something that hasn't failed us? Something that doesn't debase us, something that doesn't steal from us, something that is not controlled by human beings that are always susceptible to greed-based incentives. And so my traders are encouraged to accumulate Bitcoin and trade everything else for Bitcoin. When we trade a stock, it is to get Bitcoin. When we go into a position in a derivative, it is to get Bitcoin. It is not to get fiat. Oh, yes, we have to live using fiat today. We still live in a parallel universe, right? But our number one goal is to accumulate Bitcoin, whereas that before our number one goal was to accumulate US dollars. And I don't know if any of you have taken a look at a 100-year chart of the US dollar lately, but if you ever do, you'll quickly realize that's not the thing you should be giving your life for. And if you look at the lifelong chart of Bitcoin, you'll clearly see that's what you should be giving your life for. We have to give our lives for something. That exchange is going to happen one way or the other. You just have to pick the right thing to exchange your value for. And I say that should be Bitcoin. All right, enough of that. So I made this decision to share this framework, which I always do with my traders. All right, during the last cycle in 2019, I want to give you a little backdrop here. In 2019, I told my traders that we would be making our first major foray in Bitcoin. Everyone got excited. All right. But I told them that it wasn't ready yet. And I told him that I did not have any clue as to when it would be ready. But now it's not ready. This was the latter part of 2019. Well, the opportunity for us to strike came on March 12th of 2020. I remember it like it was yesterday. All right. I had a big speech to do the following day at the headquarters at the NASDAQ headquarters in Times Square, New York. I was in the lobby hotel of the W Hotel, and I get a call. All right. 7:00, 7:30 in the morning, New York time. Bitcoin is crashing. Oliver, Bitcoin is crashing. Have you seen it? And I hadn't seen it at that moment. I was having coffee in the lobby. I immediately said, this is the moment. This is our moment. How much is it down? It's down over 50%, Oliver. I said, good. All right. Now, here's what you're going to instruct everyone to do. We're going to layer into Bitcoin in this collapse starting now, and we're going to layer in every 500 points down. And the person on the other end of the phone, all right, she said, it was a she says, are you serious? And I said, yes. Now, starting now, in the midst of this collapse? Yes. I said, yes. Do you need me to say it in a different language? Yes. Every $500 down. And I then gave her the instruction. You're going to do it like this. We're going to buy on the 8 and the 3 in every single phase down. So we're going to buy at 6,800, and then 6,300, then 5,800, then 5,300, then 4,800, then 4,300, then 3,800, then 3,300. And that's how you're going to stage the $500 buy-ins at a time. Well, we got the lowest price we got in that cascading buy scenario was 3,800. Now, I had 9,000 traders doing that. And some of them may even be listening to this right now. They will tell you. Okay. That's March 12th and March 13th. We did it 2 days in a row. And I believe recently I posted some receipts, but that was on the shitcoin Ethereum. But I'm almost embarrassed to say we were doing it with Ethereum as well. All right. That was when I was still into the idea that there was something else really valid other than Bitcoin. Anyway, to make a long story short, once our initial position was in, I began framing out the bull period. I believed that the bull period had already started. I believed at the time that collapse was a false collapse due to the C19 scare, and that would quickly be gobbled up. I believed that Bitcoin's low was already in, which it made in 2018. I was specifically waiting for the halving to occur, but the collapse before the halving, which I believe occurred in May, it did in May of 2020, that collapse gave me a better opportunity than the halving. Now, once we had our initial position in, we didn't stop there. All right, we continued to accumulate and continued to accumulate. And I can tell you to this very day, guys, to this very day, all right, there have been very few days since March 12th of 2020 that I have not bought Bitcoin. You can count on two hands how many days I've missed. Now, not the same amounts. I certainly bought way more aggressively than I buy today in the beginning. But this is what I'm referring to when I talk about, when I get to the point where I talk about Bitcoin is a life-changing mechanism with an accumulation plan. It is not a life-changing mechanism with a sell plan. And I will touch upon this before I leave you today. So what happened was that I had to come up with a framework for my traders to operate in, all right, which we always do. So anytime we're taking a medium to longer term holding period, we operate within a framed structure, knowing that it's just a framework. It could be off, all right? But you can't just send your ship out at sea with no destination, with no framework whatsoever, and just hang out at sea. You've got to have some framework, all right? Knowing that it's possible that the framework is off. But it's better than having nothing. It's better than just being a ship at sea without anything at all. What are we doing out here? I don't know, right? So I structured the framework and I said, listen, the first, based on my historical work over the past, and I'd been doing work on Bitcoin for about a little over a year at that point, maybe even closer to a year and a half, preparing for the initial strike we were going to make. It was something that I don't ever go into something blindly like that. There's always this period of thorough investigation and study. And it's usually based on historical. I want to see the item's historical cycles. And so studying the few cycles that we had in Bitcoin, which was always my problem when people brought Bitcoin up to me before, I told them it's too young. I don't have enough data to come up with some framework. But based on the little bit of historical precedent, a few of the historical precedences that Bitcoin had, I came up with two targets, an initial target of 40,000. Now think about this. We had just got Bitcoin off the low. We picked off the low at our lowest buy point at 3,800. And we're now hovering 6,000, and I'm calling for 40,000. I'm going to tell you the vast majority of my traders laughed at me. And I'm like, well, what are you talking about? Why are you laughing at me? And they're like, Oliver, come on, 40,000. And I'm like, well, if you're going to laugh at 40,000, that's the first target. The ultimate one is 70,000. And they're like, are you out of your mind, Oliver? And I'm like, no. Well, I said, look at the data. And so when I showed them the data, they got so involved in the data that I had been studying that they're like, Oliver, we think you're off with 70,000. This is higher. I'm like, well, let's not go that far. All right. So 40,000 is the first. I think we fall from there. And from there, we run to 70. And so that's the framework. Now, of course, my traders know these things can be off, but we have to have something. So lo and behold, we got up to as high as 38 and change. Bitcoin pulled back. I don't know if you recall this, to 30. And then on its way back up, that's when Elon Musk and Tesla made the buys, and that shot Bitcoin into the 40s. And then ultimately, we went up to 64,000 from there. So one can argue that I got very close on that first run. But see, the first run that was going on to that $64,000 initial point in 2021, we judge moves by the velocity of them, right? So there's a velocity metric we apply to something, and that velocity was so powerful that I actually redid the framework at the time. And my traders will tell you to this very day, Oliver upped it from 70,000 to 108. That was the exact number I came up with, 108. And then something happened that it was impossible to suspect or to anticipate, right? I made this change in March of 2021. And in May, so now by March of 2021, we no longer have a $70,000 top as a framed general area. We now have a 108 top. Okay. And this does help us adjust our risk models based on this, right? So to make a long story short, May, China bans Bitcoin mining. And it wasn't so much the banning, well, I guess it is so much the banning, but the banning of Bitcoin mining out of the country caused a huge amount of Bitcoin miners to be unplugged in the country. And what that did at the time, the majority of Bitcoin's hash rate was still in China, which means that the majority of the network's computational work was still being done by miners in China. And by unplugging the majority of the network's hash power, the hash rate took a big hit. Now, there's this general notion that I'm not quite sure is absolutely true in the short term, but I do believe it's true in the long term, is that price follows hash rate. And so the hash rate dropped, and that's when I knew that, okay, now we're going to get a bigger pullback than normal. Because imagine taking big, giant, imagine losing 50% of your body. Bitcoin lost 50% of its hash power. And it took a major chunk out of the network. It clipped its wings and knocked the wind out of it for a bit. So Bitcoin falls from 64 all the way back down to 28,000. Now, what I then did was I dropped the range. I kept the 108,000 target, but I dropped the range from like low 80s to 108. So now I created a range, right? Well, Bitcoin, of course, as you know, moves all the way back and tops out at 69. Now, it's my thesis that had there not been a blow to the hash rate, that Bitcoin would have potentially not only achieved the 108, but blew past. I believe that it would have blown past the 108 target, because what that forced Bitcoin to do was to double dip. And what I mean by double dip is it forced it to use its energy, its effort, and its life to do what it already did. So it's sort of like taking a runner and saying, listen, here's a 100-mile race. All right, a 100. Let's call it a 108-mile race. All right, to tie in with the target. Here's a 108-mile race. Now go. Now, when you get to the 69-mile mark, all right, and then someone says, "Wait a minute, now, wait a minute. What you have to do, stop the race. I want you to quickly go back to the 28-mile mark and continue the race from there." The runner's going to be like, "Whoa, wait a minute, what are you doing? There's no, my time is now going to be destroyed. There's no way for me to reach 108, the 108-mile finish now, having to redo 41,000 miles. 41 miles. I already ran those 41 miles. You're going to make me run the 41 miles again?" And so it's very much akin to that. Bitcoin had to run from 28 to 64 again when it already did that. But it has to use computational energy. It has to use, and it has to reincorporate cost. It has to redo all the energy to accomplish what it already had. And so if you were to take the moves from 28 to 60 to 69, which it did after the hash rate collapse, it regained its hash rate power, which was freaking amazing. It redid its last run from 28 to 64 and surpassed it by a little bit to 69, 69.4 at the very peak, depending upon the specific exchange you're looking at, right? because we traded on multiple exchanges throughout the world, right? So anyway, the point I'm trying to make here, and I'm not really trying to make excuses. It's just a thesis. I'm not trying to make an excuse for being wrong with the 108. I just there's an argument there that Bitcoin could have gotten there if it didn't have to go all the way back to mile 28 and redo the miles that it already did. All right. There's an argument, a very valid argument for that, because it takes energy to move those prices. Okay. So it had to double dip in its energy pot. If you were to take 28 to 69, if you were to take that price range and put it on top of the 64, you get something like 105. All right. Now, that might be a little unfair because you have to account for small pullbacks along the way, which Bitcoin typically does have. But what it also does is it also overshoots. And I believe its inability to overshoot was due to the hit to the hash rate as well. Now, where does this come into play? Well, it comes into play that oftentimes when you hold something back, it builds and accumulates that power for the next run. And this is a common theme in financial markets. It's almost like shaking a Coke bottle up, Pepsi bottle, or whatever your choice is. All right. And if you shake real fast and pop it, there's fizz. But if you keep shaking it and don't take the top off, you hold the top on it longer and longer and longer. When you finally let that top go, wow, does it blow. And so I believe that there's a good possibility that Bitcoin's top was held tightly on, in large part by the Bitcoin mining, and then secondarily by other things like the institution of or the approval of a futures-based Bitcoin ETF right at the top in November of 2021, and so forth and so on. So there were other things that also helped, but the main thing, in my opinion, was the China ban. But the top was held on. And so that reserved power, in my opinion, has the potential to reveal itself um, in all of its potency during the next run. All right. Now, what I will say is this as well, that the image that you see that I sort of hand drew in, I want to explain this a little bit. So if you can, just pull that up. Pull that image up in my last post, if you can. And what you're looking at is a monthly chart of Bitcoin's entire life. And the two moving averages that are overlaid on that chart are the 100 and the 200 moving averages. And those are two moving averages I love to use on the monthly chart because it gives me my value range based on my historical work on Bitcoin. So if you were to look at those two moving averages and you were to extrapolate them all the way back to Bitcoin's initial start, you'd see that Bitcoin's true valuation, true extreme value zone is between those moving averages all the way back to 2011. If you were to imagine the two lines and give them lives to the left, there wasn't enough data. But if you can just imagine those lines continuing to the left, you'd see that the bottom in 2011 was in the zone, and the bottom in 2015 was in the zone, and the bottom in 2019 was in the zone, and the bottom in 2023 was in the zone as well. Bottom in 2022, I'm sorry, was in the zone as well. What I also like about this chart in those two moving averages is it shows that once you're out of it, historically at least, you don't go back in. All right. Now, everything that I've drawn forward is based on historical and historical precedent based set by Bitcoin in its previous cycles. Now, admittedly, we don't have a lot of data points for this. It's not like we have 50 data points. We've got 4 data points. All right. So, or 3. Arguably, we've got 3 data points. So there's not a lot of data points here. All right. If this were a yearly cycle, then we'd have 14 data points. But Bitcoin cycles happen in 4 years, so we don't have many data points. That's how early we are. But based on the few data points that we have, once you're out of that value zone, it's gone. Then that value zone's over. All right. Unless there's some black swan event that causes a gift of some nature, like C19 did. But usually you just don't get it again. Okay. So one of the things I want to go over is how that green line mimics what has happened in the past, the drawn in line. So let me cover this step by step so you understand it with a slightly bit more detail here. So item number 1, which I want you to understand, is that Bitcoin's bottoms have always formed 2 years before the halving. And that bottom can actually form between September and January of the period that's 2 years before the halving. So this halving is 2024. So 2 years before 2024, all right, is 2022. And so the January, I always like to use that month. Bitcoin appears to start the brand new year as if it has a brand new life. All right. And so it makes a bottom in that latter part of the even year, 2 years, and starts a brand new life that January of the following, at the bottom. And so sometimes that bottom happens in November, sometimes that bottom happens in December, sometimes that bottom happens in October, whatever. But the January that follows that bottom is almost like this is a different item now. It literally starts the brand new year like a different item. And it did that this year. It has done this every single time. Look at image number 2 in my post, where I show you January 15th's bottom. I show you January 19th's bottom. I show you January 23rd's bottom. And what I show you is the beginning of a brand new life, a beginning of a brand new nature, a beginning of a brand new phase that involves a brand new set of characteristics for the item. It's weird that way. It's crazy that way, actually. All right. Anyway, so the second item shows that the 2 Januaries before the halving, your bottom is in. And this is one of the main reasons why I was here on Twitter at the time. It's now called X, but I was here showing you buys at major clips of Bitcoin, if you remember, right? 15, 16, 16.5, telling you that I believed with every fiber of my being that we were at the bottom based on this historical work. Now, some people say, well, Oliver, the past is no guarantee that of the future. I know that, but then what else are you going to use then? Nothing? And these platitudes, these empty platitudes are thrown at me all the time. And they mean absolutely nothing. All they're really used for by most people, oh, well, the past doesn't necessarily guarantee the future. All those empty platitudes, really, what they're really used for is a Freudian way to hide from acting, to prevent one from taking the freaking risk and to just do something. Most people will are more comfortable making an excuse not to take the risk, not to take the step, not to do something, than to do something. So they gravitate toward these empty platitudes. Because when people come to me and say, well, Oliver, all of your historical work is great, but that doesn't mean that it's going to happen again. I know this. Now what? You don't use anything? Like the past is the only thing we have. All right. The, there's no guarantee that Tuesday follows Monday, but it has always followed Monday. Tuesday has always followed Monday. I know it's possible that Tuesday, we don't have another Tuesday. I know this. I know that a meteor can hit the planet and blow us all up before the next Tuesday. I get it. But we got to have something. And the only thing we have to work with is history. And so, based on this history, the bottom happens right before the 2 Januaries before the halving every single time. That's what we have. We don't have anything else. And so, I'm going to bet that way until it stops working. And I believe that's what I teach my traders to do. Stop overthinking this. This is what happened. This has happened every single time. Why are you overthinking this? All right. Just do it until it stops freaking working. And it hasn't stopped working. And so we won't know until it stops working, right? Until 4 Januaries from now. Think about that. We won't know until the 2 Januaries before 2028 because this one worked. And so I was right. Well, I was right to go with the only thing that has ever happened. That was the bottom. All right. Now, what's the next thing that has always happened? The next thing that has always happened is that by the date of the halving, and the halving is scheduled at the end of April so far, there's no way to put a specific date and time on it because it's based on a number of blocks. Every 210,000 Bitcoin blocks, there's a halving, but those blocks are the network, through its difficulty adjustment, attempts to have the average blocks come out about every 10 minutes. But it's impossible to nail that every single time. So, for instance, the average block span, the average blocks time between blocks over the past 30 days has been 8 minutes and 91 seconds. So, 8 minutes, 91 seconds, 8 minutes and 50 some odd seconds or so, almost 9 minutes. So that's pretty darn close. But sometimes that average comes out a little bit higher than 10 minutes. So it approaches an average of 10 minutes. But because we can't know the specific time each block from now until 210 blocks are achieved, we can't nail it down specifically to a specific date or time. But a general area of the month, yes. So the general area of the month is late April. All right. Now, every single time Bitcoin has been up significantly off the low by the date of the halving, every single time. This is something that has never not occurred. It's never been flat. It's never been lower than the low before the halving. It's always significantly off the low being, let's call the low 16,000. All right. So it's always significantly off the low by the date of the halving. So we, based on an historical precedent, we can pretty much bank on, if this is to continue, Bitcoin being significantly off of 16,000, not marginally, significantly. Now, what is significantly? Well, I've done this study for you. All right. It's between 200 and 500% every single time. between 200 and 500%. So you want to split the baby with that? Split the baby. You want to take the lowest number? All right, you can take the lowest number, 200%. All right, that would put you at 32. All right, by the halving. You can take the high number, that would put you higher. All right, but the point is that by the halving, you're always significantly off the low. All right. Now, the other item here that surprises most people, item number 3 in my post, is most people have great expectations for the halving, but oftentimes that disappoints greatly, that the price is rather subdued historically after the halving. Miners start having trouble because their reward's been cut in half unless there is significant price improvement. All right. And price today would have to get above 68,000, more or less, guys. It's not exact, right? Because every miner's efficiency is different. But if you were to do a study, which I have done across all the miners, you'd find that after the halving, in order for all the miners to be okay, you need a price point above 68,000, more or less. Okay. And if you don't have a price point of 68,000 or more, I you can bet your bottom dollar that there are going to be some miners that get gobbled up by the more efficient ones or go out of business. And so all of that becomes FUD around the time, and people get disappointed that think that the Bitcoin's supposed to move after the halving. People buy right after the halving or right before, and they get disappointed, and there's a lot of selling, and coins go back on exchanges. This is disappointment. And then all the normal talk again. Bitcoin's finished. It's different this time. It's done. It's old. It's boomer coin, this and that. Look, the halving had no effect. That, bull, 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 bull. All right. What these people don't understand is that it always takes 6 to 8 months after a supply change to work through the system. And this goes across all financial segments of the world. So when the Fed raises the discount rate, all right, for instance, it's affecting supply. It takes about 6 to 8 months before the world starts to feel the effect of that one hike. It doesn't happen right away. All right. And so the same thing with Bitcoin. When the supply gets cut in half, it has no immediate effect. It takes about 6 to 8 months for that supply shock to work its way through the system. All right. And because people are prepared for the halving, they make certain moves, and by 6 to 8 months later, all of that preparedness is gone, and boom, the full effect of the halving takes place. That brings us virtually every single year to about a few weeks before the US presidential election. Now, I don't want to be a conspiracy theorist here, but I am going to dabble in it just a tiny bit here, just because it's freaking entertaining. All right. I don't know whether or not Satoshi Nakamoto timed this shit right to be right before every US presidential election, but I kid you not, you can go over the history. I've done it for you so you don't have to, but you are free to do it yourself. Just before the presidential election, every 4 years, Bitcoin is freaking rocking. Now, you don't believe me? You do the work then. I've done it for you, but you do it then. You can go back to every presidential election since Bitcoin was alive. And several weeks before the election, this thing is banging. This thing is knocking down the world, almost as if to say, I'm going to use the US presidential election, the most popular election on planet Earth, to get the attention of the world. It's freaking crazy to me. All right, I digress. But several weeks before 2024, if history's any guide, that's when the effect of the halving takes place. And that's the most meteoric part of Bitcoin's bull cycle every single 4 years without fail. Without fail. And so if you look at the drawing that I made, you see this rise up into the halving and a pullback a little bit. All right. That's typical. So for instance, last cycle, Bitcoin dropped to 3124 and it dropped from near 20,000 to 3124. I was studying this drop. I studied Bitcoin the whole way down without touching it. But so it dropped. I told my traders that we can't buy that drop. I'm kind of sorry we didn't, but my traders are taught the first move up off the bottom is not the one typically. It's the second move off the bottom. So my traders know this is market law. My market law number 4 rule. It's not the first, it's the second, right? And it's called market law number 4 because it's the 4th trading law in my book of laws. So it's at the first bottom that gets that suckers everybody in and then slams them back down. And then the second bottom is the one you buy. So the first bottom was in 2008. The second one was in basically 2020. They don't have to be close apart, really. But that bottom from 2018 moved from 3124 all the way back to 14 or so, or close to it. That's a huge move. And then it dropped all the way back to 38 and change, 37, 35 or so. And that's the one we piled into on that collapse. But my point is that you got extremely high off of that bottom, right? You got extremely high off of that bottom from 3124 to near 14. That's a huge move off the low. And if you were to go back to every low before the halving, you'd see a huge move off of the low every single time. Huge. And so I just don't think that where we are now is all that huge off the low. There's higher prices to come if history's any guide before the halving. And that's April of 2024. But Oliver, history is no guarantee that it repeats. I know that, but then what else are we going to use? Oliver, past performance is no guarantee of future performance. I know, but what else are we going to use? But Oliver. That's all we've got, guys. Otherwise, just stay home and watch Netflix and do nothing because we've got nothing else. All right. But Oliver. The relentless bull run does historically top out around, if I had to pick one month, it's around the mid to latter part of November, if I had to pick one month. But if you give me a period, it's typically between September and December of the following year. So if the halving happens in 2024, right, if the halving happens in 2024 and the meteoric part of the bull run happens just around presidential time in 2024, then the top typically happens a year later between September and December of 2025. Now, guys, I've done the work on this. You can go back and do it yourself all over again. In fact, it'd probably be a good exercise. But I can show you this, guys, if I can. And what I will do is I will add this to our live if I can get it here. I, I'm I think I can I do this? Can I add this? I don't know if I can. Yeah, here it is. Let me see if I can add this. No. You know what I'm going to do? I am going to add this. Uh, I'm going to add this to the original post. So let me do that now. Let me do that now. Okay. Just want to make sure I'm still okay here. Am I still okay? Yes, I'm still okay. I want to do that now. Give me just a moment, and I'm going to add this. I've shown you this before. This is from my man, the Rational Root, which I have shown you before. I'll add it to both. Why don't I add it to both here? I'll add it to the live, all right, which I just did here. And I'll add it to the original post as well. And I strongly encourage you guys to follow Rational Root. He's pretty amazing as far as I'm concerned with his analysis, his historical analysis of Bitcoin here. He's helped me in a huge way, believe it or not. But there we have it. All right. So if you were to pull what I just posted up, guys, I did it both in the live and I did attach it as well to the original post. If you pull up the Rational Roots 4-year cycle sparrow, I want you to understand that every complete circle is 4 years. All right. So one complete circle is equivalent to one of Bitcoin's 4-year cycles. Now, what I want you to look at is the bottom. I want you to look at the circle as if it's 6 o'clock, as if it's a clock, right? And I want you to look at 6 o'clock. 6 o'clock, where you see 2011, 2015, 2019, 2023, and 2027, right? Now, 2023, let's call that January 2023. Those red dots are all in the same area, aren't they? Those are all of Bitcoin's bottoms. Now, there's a red dot in the first cycle. The first cycle is a little weird because it wasn't a full 4 years. So we can't really incorporate that one so much. This is incorporating a complete 4-year cycle. All right. And so when we just consider all the 4-year cycles, look at where the bottom always happens, around 6 o'clock. All right. Now, the halvings happen because it's not an even 4 years, it's 210,000 blocks. They happen a little more haphazardly, a little bit, not much, but they're clustered, not the first one. Remember, the first one doesn't include a 4-year cycle. So if you look at the next one coming up, look at where the green line is anticipating the next halving. Around the same time, more or less, that the previous 2 halvings have occurred. That's at 10 o'clock, right? So roughly 10 o'clock. Okay. If we go to 12 o'clock, that's the presidential election. So presidential election is at 12 o'clock. Now, I want you to look at 12 o'clock, how the orange line, the path of Bitcoin's price, accelerates right there almost every single time. Look at the acceleration starting from the presidential election. Do I have this right? I don't have this right, do I? Yeah, I do. Yeah. Okay. Now look at so we accelerate kind of as we move close to 2025, the latter part of 2024 into 2025. 2025 is the meteoric part of the cycle. That moves us into 3 o'clock or just before 3 o'clock. Look at where all the topping bullets are, the topping points are. All right, all clustered together there. So, guys, if we were to circle all the dots, so put a circle around all the dots around 3 o'clock, put a circle around all the dots, not the first one. Let's forget about the first one. So, put a circle around the three dots around just around 3 o'clock. Put a circle around the three dots just around 6 o'clock. Put a circle around the two dots, and we're coming on the third one, around the 10 o'clock mark. And you'll see that it's almost mathematical. It's following just a mathematical model. And this is why I'm constantly encouraging you, drop the narratives. Oh, but Oliver, the recession. Bitcoin doesn't care about a recession. Oh, wait a minute, the Fed's going to start raising interest rates. Did Bitcoin care? No, it had its bear market exactly when it always has its bear market. Oh, wait a minute, Oliver, the FTX scams and the Celsius and the Luna and the Do Kwons and the Alamedas and dot, 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 dot. Bitcoin bottomed exactly when it always bottoms. Like, the narratives don't mean anything to Bitcoin. Now, some might say, well, Oliver, you just discussed a narrative with the Chinese miner banning. Isn't that a narrative? No, that is not a narrative. That's an event. That's an event that has a direct effect on the network, pulling 65% of Bitcoin's, unplugging 65% of Bitcoin's mining rigs. Obviously affects the network. Raising interest rates don't affect the network. Whatever scam, bankrupt, fraud doesn't affect the network. So Bitcoin's banning, China's banning of mining, forcing the miners to affect the network, had an effect. But everything else is a narrative that has zero effect on Bitcoin. And this shows you clear as day. I remember when everyone was saying, well, Oliver, Bitcoin's always operated in a high liquidity environment. Liquidity has been sucked out of the system, Oliver. Yeah, but it's the second best performing asset on planet Earth this year. So where's the narrative? Where's the narrative with that? Well, Oliver, Bitcoin's Bitcoin has always lived its life during quantitative easing. Quantitative tightening is a different story. Bitcoin had the shallowest bear market in its history, during the most unprecedented hike in interest rates in the history of the financial world. Narrative blown. Well, Oliver, all the fraud in the system. Bitcoin bottomed right on time, despite all the fraud. Well, Bitcoin's never come up against a hostile regulator, hostile regulation. Despite the SEC's antics, Bitcoin has done the same thing it has always done every single 4 years. Despite all your talk, all your narratives, all your suppositions. And I'm constantly trying to tell my traders, pounding the table on this, stop imagining things that have never happened. Stop it. Because what that will cause, coming up with these scenarios that have never happened, they become your brain children. You've heard of the term, thoughts are your brain, a thought is your brain child, right? You've heard of that term, right? These ideas that you fancifully come up with, they become your brain children. And there is this natural paternal instinct, this paternal, if you're a male, this maternal, if you're a female, this natural instinct is to protect your children. So you would actually give your children, your brain children, these fanciful ideas, these thoughts of things, these imaginations that have never happened that become your children. You give them the benefit of the doubt over factual things that have happened over and over again. They become more important. Your idea becomes more important than what is real. Your image becomes more important than what's staring you in the face as real. Your your creation, that is where ego comes from, right? I create reality. You have created a reality in your mind that is not real. It's real. And the more you repeat it, the more real it becomes for you. So when you say to yourself over and over again, that a low liquidity environment can't have a rising Bitcoin price, that becomes your child and you will protect it to the death, despite the fact that in a low liquidity environment, Bitcoin is the second best performing asset on planet Earth. And you'll brush that off because you're locked into supporting your brainchild that has no basis in reality. And I'm constantly on my traders about this. Stop freaking creating scenarios that have never happened before. I can create a lot of, well, Oliver, what if a meteor hits planet Earth and destroys us all? We can sit here all day and create shit that never happened before. What if an alien race that's far more superior to us, right, enslaves all human race? Like, how far do you want to go with creating your fanciful ideas of things that have never happened before? What if this is really not true existence and we're all living in a matrix? We're all living in a dream and none of this matters. Like, come on, we have to stop this. The only thing we have is history. And if you don't know where you've come from, I promise you, you'll never get to where you want to go. You have to know history. And the majority of people I come in contact with on this thing called Twitter or X have no concept of history. Everybody here is looking for money, but how many people here have actually studied money, studied the history of money, studied the evolutionary process of how money has moved through the ages and become what it is? All right. No, almost no one that I come in contact with has this fundamental understanding of the four stages that money goes through: collectible, store of value, medium of exchange, and then unit of account. If they did, they wouldn't buy into shitcoins because a shitcoin is attempting to cheat the four stages of money. How many people have actually studied the thing they want to have more than anything in life? Most people want money more than anything in life, but have they ever picked up a book about money? Have they ever studied the history of money? They'll never have it because they don't know it, but they want it, but they don't know it. I was told, Oliver, move to Twitter. Because I've been on Twitter since 2009. I was told by my staff, Oliver, move to Twitter. Why? Twitter is, they have people that are just generally, the culture there is more educational. The culture is more intelligent. They're not into photos of naked people. Um, it's about topics that are relevant and important and this and that. And by and large, the average person is more intelligent. You'll fit perfectly there. Go open your mouth up over there. I'm like, all right, I'll try it. And what have I found? Actually, I found that that's true, believe it or not. You guys are smarter. As dumb as some of the things that I've heard and read and responded to, by and large, the Twitter crowd is smarter. I have to give that. to it. It's a higher level, but that doesn't mean there's not dumbness. OMG. That doesn't mean that. When I mean it's smarter, I'm saying that instead of 98% of the things that come out of people's mouths, you can know right away, have no basis at all in anything that has been investigated, studied, or looked at in a thorough way. That it's all third and fourth party stuff that they've actually just heard in passing somewhere that no one has. So instead of 98%, it's like 92%. So yeah, it's better, but it's marginally better. I just find that people don't investigate anymore. People don't read. They skim. People don't sit down and ponder anymore. They'd rather watch a Netflix movie about something than actually delve into the real history of something instead of someone's interpretation of it. And I believe that that's sad, especially when it comes to something like Bitcoin, which has such an amazing potential, in my opinion, to change your life and the lives of your family members forever. We have the opportunity to have generation after generation, generations that aren't even born yet, remember your name because of what you do here today. But I will tell you this, in my opinion, your window of opportunity to affect your family's life in a very profound way, that window is going to disappear. It's disappearing. It's going to disappear pretty quickly. Not that Bitcoin will stop delivering benefits. I believe that Bitcoin delivers benefits to the human race for 1,000 years. What I'm saying is that the land grab stage doesn't last very long. And we still have that today. At $28,000 a coin, or 0.00028, I missed a zero on one of my previous posts. But in order to know what a single Satoshi is worth, all you got to do is put 3 zeros in front of the actual price. So if Bitcoin's at 28,000, just put 0.3028. That's the price of one Satoshi. If Bitcoin's at 32,000, you put 0.300032 per Satoshi. So we're still in the land grab stage where Satoshi is a fraction of a fraction of a fraction of a penny. But that stage is going to disappear. Bitcoin's already outpriced most single-digit millionaires. At 28,000, most single-digit millionaires can't buy a full coin because their values in a business, or their values in property, or their value is leveraged. They don't have a free 28,000 to be buying 2-3 coins. They don't have 100,000 to buy 3.5 coins. They don't. That's single-digit millionaires. They don't have it free. The majority don't. They're millionaires on paper because they have four commercial properties somewhere, or they have a farm that is worth 6 million, but they just live off the farm at the rate of $1,100 a month, a week. A person may be worth 6 million because of that farm, but they're earning $1,200-$1,500 a week. That they can't be a whole coiner. At single digit millionaires are priced out at 28. What do you think is going to happen at 150, 250, 300? You're going to start pricing out the double digit millionaires. You're going to start pricing out the triple digit millionaires. And at some point, you will price out billionaires. There's just not enough to go around in the first place. And when we throw these numbers out, it's not liquid in most cases. It's not that your guy with $12 million in net value has $12 million to throw around. They're lucky if they got 250,000 to throw around. And so At 300,000, you're pricing out double-digit millionaires. At over 500,000, you're pricing out triple-digit millionaires in terms of what they have available in terms of liquidity they can just throw into Bitcoin. Your window of opportunity to affect your family's future and the generations that are not born. I am talking about the children that your children haven't had yet and the children that their children haven't had yet. These people will remember your name. And I believe to this very day that they're going to judge you, because the future generations not born are going to realize that a member of their family had the ability to get this and they didn't. They were that dumb, they were that blind, they were that stupid. It's going to seem so obvious to them 2 generations from now, and they're going to blame you. That's what you want? I say stake your claim now and don't stop. Don't stop staking your claim. Don't say, I've got enough U.S. land and we're giving out land for free. I've got enough. I don't want any more free. I don't want any more free land. As long as that window's open, stake, stake, stake. It's your family. Family members not born yet. Generations to come will remember your name. All right, guys, I just wanted to take a brief period out of your time today to add nuance and depth to that post. I suspected that I'd get a lot of questions or comments on it, so I wanted to head those off with a talk with you. All right. And so I do see someone here requesting that I give the mic to them, and it's customary for me to remind you that I don't do that, at least not at this point, maybe sometime in the future. But um, if you have any questions, I'm certainly willing to take them. And I do see some comments here, so let me see what we have. Phil says, is this guy just talking to himself? Absolutely. Just talking to myself. Phi Capital Investments. All right. What I also often remind you of is that my team will take the content from these talks and splice them up and use them for things, going forward in the future. So whether there's 1 or 2 people here or 200 people here, doesn't really matter to them. This is recorded, debanked, but not deterred. Saying, yes, this is recorded, so you'll be able to come back and listen to it. Jay Nato is saying, boss, let's say we get a crash in the overall markets in 2024. Do you see that black swan event having a positive effect on Bitcoin? Bitcoin is risk on or flight to safety? I believe, and I posted something to explain my reasons for this, Jay, but I believe that Bitcoin has already transitioned to be a risk off asset and will increasingly become more and more of a risk off asset. This is why you're seeing it become more resilient in the face of negativity. It's becoming slightly less volatile in the face of a more volatile world. This transition from a risk on asset to a risk off asset had started all the way back in March of 2020. It showed the world through its violent and vicious comeback off of a global collapse, as basically it began to show its resilience in the face of the worst possible scenario. It further tested that thesis out in the beginning of 2023 during the preview of a bank collapse that we had. Bitcoin's birth was the result of banks collapsing. And I think I remember telling you that there is a metric that actually measures the risk the bad risk. It measures the bad risk of an asset. And it's called the Sortino ratio. All right, now you can look up this formula. I did do a post that included it, I think about a week ago, 2 weeks ago. But I spoke about this ratio, which we used to trade based off of. So I used to get accumulation orders to do nothing but accumulate a stock. So I would have an order that says, okay, Oliver, by the end of the day, we need you to have no less than 88,000 shares of the stock. But now it wasn't that I was to go out and buy 88,000 shares at one shot. I had to gradually accumulate it during the day, taking advantage of dips and pullbacks or whatever to try to get the best average price of that full 88,000 shares for that day. And what was always given to me were stocks that had very high Sortino ratios. And so, what this ratio is supposed to measure is the bad risk, $1 of bad risk to every $1 of gain. And if the ratio is high, if the Sortino ratio is high, what it tells you is that for every dollar of bad risk in the stock, bad downside risk, bad downside price risk, you get an exponential rise in upside. So it's worth the reward. Many professionals use the Sortino ratio to judge whether an asset is risk off or risk on. And so Bitcoin has risen to have an extraordinarily high Sortino ratio. Its Sortino ratio is higher than every other asset today. Now, I know I was in this space, guys. I know professionals know this. You don't know it, maybe, but the big money world knows Bitcoin Sortino ratio. It's like 1.57 or something like that, which is crazy. And so there is no other asset with a Sortino ratio of 1.57. And that's how professionals judge risk on or risk off, by that ratio. And I'm telling you, that's a no risk rate. That's a low risk off ratio right there. And so this idea, this narrative again, is actually being proven more and more wrong. That Bitcoin was not designed to be risk on, it was designed to be the opposite, the flight to safety. And that's what it's starting to prove to be. And I think that we will see more and more of this happen, guys. I believe so. So if we get a collapse, do I believe that Bitcoin will collapse too? Well, it depends on what kind of collapse, because certain collapses will cause Bitcoin, in my opinion, to rise. There are collapses where it's not an everything collapse, it's a secular collapse. And I believe in certain secular collapses, Bitcoin benefits because the money comes out of one asset and goes into the other. And I think Bitcoin being an increasingly a risk-off asset, money will flow to that during uncertain times. If we get an everything collapse, meaning like a C19 collapse where everything in the world is being doubted and there's no safe haven whatsoever, then yes, it can, but that will be just like C19, March of 2020, it'll be the freaking gift of a lifetime. And so I'm not afraid of those. Those are brief, statistically very brief, and they're very opportunistic for people who know the history of these things. All right. What else here? Yes, I'm on board here live today. All right, Filippo is saying, Oliver, Bitcoin is on its way to being an asset into which trillions and trillions of dollars will flow, including the stock market. Taking as a basis that the stock market is important for attracting and growing companies. I think, let me see if I can understand where you're going with this. I think understand this, but I believe that many people, listen to me carefully, guys, this is important. I believe that many people are thinking one dimensional about Bitcoin adoption. You see, the shitcoin market has indoctrinated and brainwashed everyone into believing that adoption is some type of speed of, you know, transactions per second or some bullshit like that. That's not adoption, or how many hamburger joints accept Bitcoin. It's not freaking adoption. What is that going to do? All right, so you can buy your beer and your hot dog and your French fries a few milliseconds faster. Like, it's not freaking adoption. And it's one dimensional to think that Bitcoin needs to be used like that to be adopted. And it's missing the whole freaking point. The real adoption is the adoption of Bitcoin from other asset classes, not from buying freaking hot dogs and burgers and buying pizzas. It's what percentage of people have money in the stock market that will take a portion of that and now put it in Bitcoin? How many people have 27 buildings because it was really the only thing that they could use as a store of value? And they're going to say, well, you know, I don't only need 27 now. Let me go down to 10 buildings and put the rest in Bitcoin. How many people are going to say, well, Bitcoin outperforms bonds by a long shot. I've got 40% of my wealth in bonds. Let me cut that down to 20% and move the rest to Bitcoin. How many people have ugly pieces of art hanging on their wall that they don't even like to look at? But their advisors told them it was a great store of value. How many people are going to get rid of these paintings and put it into Bitcoin? Because you can't move your painting. You can't take it on a plane. You can't take 27 buildings to a different country with you. You can't. The liquidity is not there, and the liquidity is in Bitcoin. The transportability is not there with your other assets. The transportability is there with Bitcoin. The divisibility is not there with a freaking building. The visibility is there with Bitcoin. The unconfiscatable nature is not there with your building, with your art, with your gold, with your this. How many people are going to realize that gold is the 95-year-old dude in the room who had a good life, but the 14-year-old is more vibrant and will consume and outstrip the 95-year-old? You know, that's $13 trillion. How much of the gold market is going to move to Bitcoin? So every one of these shitcoiners is talking about buying pizzas and burgers faster. Oh, I can buy a burger faster than you. And they're missing the whole freaking point about what true real adoption is. It's the sucking sound of Bitcoin, sucking monetary value, sucking monetary premium out from inadequate other stores of value that had to be used because Bitcoin wasn't there. And that's a $900 trillion world. I don't know. Why did I go on this point? So, yes, the stock market will have an important role to play, but the valuations of these things will come down. I promise you that. Stocks are way overvalued, guys. Never in my history, and I have a short history, I got a 40-year history, but I have studied financial markets going back hundreds of years. And I will tell you that never in the history of the world has valuations been as high as they are now. And that's off the highs. And it's still higher than at any other point in the freaking history of the world. It's crazy. It's crazy the multiples that are being paid for, but it's because we had 14 years of free money and the money had to go somewhere. So it's like, damn, there's no other choice. Let's put it in the stock market. Let's just keep putting it there because there's nothing better. Let me just keep putting it in this fucking building because there's nothing better. Or this piece of land, there's nothing better. Or this piece of art, there's nothing better. Or let me get my 320th watch because there's nothing better. Let me stick it into this gold, this ancient rock because there's nothing better. But now there is something better, and it is going to demonetize the premiums in these things are overbought, and it's going to bring these premiums down. Homes are going to get more affordable because of Bitcoin. Stocks are going to come in more in line with their value because of Bitcoin. Do you understand? Art's not going to sell for bullshit numbers like that anymore because of Bitcoin. And that's the real adoption. And you don't need to buy a burger to have Bitcoin adopted. That's ridiculous. You bought that line from the shitcoiners, not me. Oliver, it is said that the futures market is creating price suppression. Is that true? Do we need a spot market in order to have a substantial increase in price? All right. All right, let me try to put this to bed once and for all. First of all, this idea that BlackRock is in business to suppress the price, look, I'm not going to go as far as to say that there aren't certain things done to sort of maybe retard it before a certain thing, but in all actuality, this is all overblown because BlackRock is getting into this for two reasons: to make fees off of you, to make fees off of the world. BlackRock is a fee generator. Do you understand this? It generates fees better than anyone else on planet Earth. It's a fee generator. It wouldn't do BlackRock. Think of incentives here. It wouldn't it BlackRock is not incentivized for Bitcoin to collapse. Black BlackRock is incentivized for Bitcoin to do well. BlackRock is incentivized for tens of millions of people to come into its ETF so that it can freaking bang them over the head with the fees. If Bitcoin were to collapse, that diminishes the number of people who is going to come into the ETF, therefore diminishing the fees that they would make off of the people coming into the ETF. It doesn't even make sense from an incentive. You know the old saying, show me a man's incentives, and I'll show you what a man believes. Why do you think he's talking up every single time he gets a mic shoved in front of his face? He's talking Bitcoin up. What's the last thing Larry Fink said? That it's a flight to safety. Do you understand that he is sending a signal to everyone in the world? Everyone in the world listens to him. He is telling the world, it's a flight to safety. Wake up. Because he wants all the fees that's going to come into that ETF if and when he gets it. So this idea that BlackRock wants to crash Bitcoin, hurt Bitcoin, that's bullshit. Do you understand? The other thing that they want is they want to start giving you services on it. So because an ETF is a security, you can have securitized debt on top of it. And it wants to roll out a whole bunch of products on top of your Bitcoin ETF security. So it wants to roll out red carpets and say, look, you want a house, you want this, you want that. All you got to do is post we can use your ETF shares as collateral. So it wants fees and it wants to roll out a whole bunch of services. It sees a whole brand new world to cater to this brand new asset class. An ETF means that it is looked at as a class, not an individual item. Bitcoin is a class. That is very different than an individual. You don't see anybody creating an Apple ETF, do you? Oh, yeah, we seek approval for an Apple Inc. ETF. We're going to call it the iPhone ETF. Nobody's doing that because Apple is an item, it is not a class. Bitcoin is not an item, it's beyond an item. It's a freaking entire class. And never, ever in the history of ETFs has a class, a new class, gotten an ETF and it hasn't gone up exponentially. Never. And the idea that the ETF's going to cause the opposite is dumb. The idea that BlackRock wants Bitcoin to crash is dumb. The idea that it's greatly manipulated by futures contract is only rhetoric from people who have no no real professional trading experience. They think it's as easy as, well, someone that has a lot of money can just keep, selling going short Bitcoin in the futures market, in the papers market. How? Like, dude, we would just run them out of the water. If enough people were on the short side, it brings in the other side to squeeze them. Like, how is that happening? This is very baby-like, no knowledge, no experience, no real substantial information about how real trading works, to know that every transaction is two sides. You just can't have the sell side without the buy side. So because there's always two sides, one side is going to see that the other side is too leveraged and start ramming the thing the other way. It's not like the government can just print shorts through the paper market in an unlimited way and create perpetual pressure. People fail to forget, if you're 100 times leverage, it takes 1% to blow you completely out of water. Bitcoin moves 1% in a millisecond. How can someone go 100 times leverage and not get blown out with a 1% move? Do you understand? So this is all talk from people who have no idea about real professional trading. It's not that simple. And I'm not saying that prices can't be affected by certain moves. Of course they can, because there are inefficiencies or gaps or holes, but over time, those inefficiencies disappear. Let me give you a quick story. When I first started trading in December of 1986, the average spread on a NASDAQ stock was $4. The spread between a bid and the ask was $4. That was the average, which means that there were spreads that were $16, $10, $12. That spread is an inefficiency in the market. That spread kept getting narrower and narrower and narrower. Now, what's the spread between a very liquid, actively traded stock? It's a fraction of a fraction of a fraction of a fraction of a penny. We went from an average spread of $4 to a fraction of a fraction of a fraction of a penny today. It's just a natural movement of young markets to older markets. At the time I started in 1986, the NASDAQ was barely 15 years old. Bitcoin is coming up on its 15th birthday. There are inefficiencies, and yes, traders are going to take advantage of those inefficiencies, which cause a short-term rattling of the price. But to think that you can suppress Bitcoin for any extended period of time is just not to know how financial markets work, because it can't be done. And it's much less an asset that you and I can demand to get into our own self-custody. That makes manipulation a more dangerous game. That's why every single person, every single organization that has tried up until this point to hurt Bitcoin, to manipulate it, or to suppress it, they're all gone. Every single one. Every single firm is out of business. Every single individual is either in jail, dead, or bankrupt. But it's not one. Maybe there's one. And you guys who know my beliefs know exactly what I'm talking about. And he's got to go too. But I am telling you that it is a very dangerous game to play this manipulation thing with Bitcoin in short periods. Okay. But you try to do this for an extended period of time, and I promise you, as certain as night follows the day, it's going to run you over because no one is going to get my Bitcoin. And some of you, no one's going to get your Bitcoin. That makes it a very dangerous asset to F with. Do you understand what I'm saying? It makes it a very dangerous asset to F with, especially on the short side. Especially on the short side. All right. How can the stock market remain attractive in a world with Bitcoin? It will become less attractive. Real estate will become less attractive. I am not saying that real estate is going to go away, or even gold for that matter. It's just that the prices that these things have are overblown because there was not another more viable choice. But when you stand Bitcoin next to all of them, it's like Bitcoin's in a different galaxy. Do you understand? And so every day, more and more people come to this realization that why do I have 40% in bonds? Bonds are performing worse than they ever have in history. Why do I have 27 buildings and I can't move them? I'm being taxed to death. My profits are being eroded by bad tenants. I've got 40% of my tenants 20% of my tenants aren't paying rent, and they're protected by law not to pay me rent. I've got management fees. I'm taxed to death. I've got 2 of the buildings are in the process of eminent domain now. They're confiscating them from me. All right. I can't control the politicians in the area that want to raise taxes on me almost every single year. The insurance rates are going up faster than you can say boo on these things. My maintenance fees have shot through the roof, and I can just hold this and get a return that's 2,000% more statistically over a 4-year period. Are you freaking kidding me? I'm selling some of this nonsense and I'm putting some of it in Bitcoin. When gold, look, I sold all of my gold in 2021. All of it. Guys, I was a lifelong gold bug. My dad was a gold bug, which pretty much made me a gold bug. My whole life, I sold my whole life savings of gold. And I'm telling you, it was a truckload. My traders remember all the way back to the 1990s when every one of my top traders had to walk. They could not enter my office without a solid gold piece in their pocket. I know I have some traders here that remember that. In the 1990s, that was my thing. We walked around with solid gold pieces to remind us of sound money. Some of you remember my old post back in 2000 when I was pounding the table on the first gold ETF. Some of you remember the pictures I posted of solid gold in my living room, solid bricks of silver on my floor. I would post these pictures on in Facebook back in the 2007, 2006. I was a sound money advocate and had accumulated tons of this stuff. And I sold it all for Bitcoin. You think I'm the only one in the world that's done that? You think I'm the only gold bug that's done that? You think I'm the last one to do it? Dude, I'm your precursor. I'm your preview. I'm the advanced showing of a movie that's coming to all of you. Everyone's going to do that. You know how many people own Apple? But there's no other choice because it's the most valuable asset on earth. So might as well put it in Apple. You know how many people just have money in the S&P just because just nothing else I can put it in? Well, that's no longer the case now. You got something that dwarfs these things. All right. All right, guys. I love it, man. I appreciate that. Nuolo says, keep sharing. This guy's Oliver giving pure signal, retweet shares. I appreciate that. These spaces are very informative for everyone. Let's get the space up to 100 people. That never happens, but that's okay. What I plan to do with these things, guys, will spread the message, I think, pretty far and wide. And so I'm looking forward to that. But listen, I want to thank every one of you for taking time out of your busy schedules. Guys, the most valuable asset on planet Earth is not Bitcoin. It is your time. And what's amazing about Bitcoin is that part of its value is tied to time. What's also amazing is that it's part of Bitcoin's value is tied to energy. So part of Bitcoin's existence is digital, but part of its value lives in the physical world through energy, and part of its value is tied to time. And if you think about these things, these 3 points, you really see how it's tied to the eternal, and that there is nothing more scarce on earth than your time and your energy. And time and your very life force, your very energy is the stuff that your whole being is made up of. And Bitcoin is tied into that. Its existence is made up of time, energy, and it takes time and energy and transports it to a realm that human beings are becoming more and more intimate with, a digital realm that was always there, but it's like a new frontier, like space, that we are now becoming more and more comfortable living in. It is the new frontier. It is the new land grab that ties our existing world to the new world. It's our bridge. But I want to thank you for giving me your time. I want to thank you for spending your energy here. I want to thank you all for being interested in Bitcoin. All right. Until next time, trade well, continue to accumulate Bitcoin, and I'll see you at the top. Please, it's lonely at the top. My name is Oliver Velez, and I am your 13%er Bitcoiner. Be safe out there, and until next time.